We're coming up on that closing bell. We want to bring into the stream Bill Baruch. He is Blue Line Futures President. Also, Charles Lieberman. Chuck, it's good to have you here. He is the CIO at Advisors Capital Management. Before we get their thoughts on where this market is headed, we want to go to Jared Blickery, who's launching the action on Wall Street for us. Jared?
Well, let's see where we have been today. It's been an eventful day, actually. So this is a mixed picture right now. Only the Dow just barely in the green, up 14 basis points, but hadn't seen much action before that, except for this little hiccup we had around 10:30. In fact, it was I'd call it a medium-sized hiccup, but we did recover from that. No particular news, though, so kind of noting that for the future, might be getting a little bit of liquid at these levels, but nevertheless, we do have dealers, options dealers, long gamma. That tends to suppress index level volatility. So just something to mention and follow going forward. Now, the mega caps sunk into the red. Some of them have recovered. Alphabet and Facebook here, those are both in the green, up over 0.5%. But Microsoft, Apple, and Amazon in the red, nothing off more than 1%. But guess what is off? That's Tesla, minus 5%. Haven't seen one of those days in a while. Let's just take a look at the trailing month, because we are now back by these lows we had a couple weeks ago. And let's take, in fact, a longer term look. Here's 3 months. And something's going to be clear that, well, maybe it's not clear from that particular chart, but we have broken down through a trend line that you could make through these levels here. So something to monitor going forward as well with Tesla. Also looking in the EV space, we are seeing Apple down. We already covered that, about 6%. Toyota Motors, now that is up 5%. That is a company that is bringing 3 new EV models to the market. So we will take a look at that when they finally come out. Finally, a look at the cannabis space before we head into the bell. Lots of green there. Tilray up 50% today alone, guys. Here's a bell.
And that does it for the trading day today as we shake out the final trades of the session. It looks like we're going to end the day mixed. We have the Dow holding on to gains up just 62 points, so not too far from the flat line. The Dow was off just around 150 points earlier today, so a bit of a reversal here in the last couple hours of trading. S&P and NASDAQ, though, ending the day in the red. S&P just barely, NASDAQ off around 0.2%. A couple of laggards in today's market. Jared mentioned some of the selling action that we're seeing in some of those big cap tech names, Apple and Microsoft there among the bigger names in the red today. Amazon also closing in negative territory. Taking a look at the sector action today, consumer discretionary, industrials, and technology. No surprise there after we just talked about some of those big names in the red. Those 3 sectors are the laggards: energy, communication services, and real estate, on the other hand, leading today's action. We want to bring back in Bill Baruch. He's a Blue Line Futures president there, and Chuck Lieberman, a chief investment officer at Advisors Capital Management. Bill, first to you, just your reaction to today's movement here and the fact that we did see an initial dip with the Dow off 150 points, but we were able to regain some of that momentum into the close.
Yeah, we've seen a big bounce back the last 6 days, 7, 8 days almost now, from that low a couple weeks ago. And I think that overall, there's a little exhaustion after such a directional move. In fact, we were trimming some names on the advisor side where we're managing portfolios yesterday, and just looking at, across the board, everything from Apple to Chewy and Twitter ahead of earnings, just trimming a little bit up after some of this. And yeah, stocks still can go higher. Look at Twitter today, but it's just risk management. And then one of the things I think too, CPI came out. It was a miss. It was lower than expected, and that really helped the market right away just rip higher. And when you see something like that, it almost you think, oh, I want to buy. The only way to be is get long. And those are the days you really want to be worried about. And what, lo and behold, we reversed off of that. And that I think is a sign of some exhaustion just here in the near term.
Charles, there's a lot of analysts, a lot of people who say that second quarter of this year, we will be off to the races as the economy really takes off. And you point out to people that you might want to look at, if you're going to pick some stocks, to look within different sectors like financials. And you like Citi. Why Citi? I don't know if Charles can hear us. Do we have a tech? All right, let me throw that one then to Bill. Let me see if we can get Charles' audio fixed. But Bill, if you heard me, some people are saying financials are something to look at, especially as the economy takes off in the second half of the year. What do you think of that call?
I like the call. But this is something that we've sort of looked at. We've been ahead of the curve on at our sister company as an investment advisor, Blue Line Capital. I've expected yields to rise. 10-year Treasury, which I trade on the futures side, and I've been all over. I in October was saying this thing is going to go up to 1.25%. And one of the ways you play on the equity side is getting long financials. JP Morgan was really one of the back benchmarks of what we used. Bank of America, and then KRE was a good broad way to get some exposure into the regional banks, and they've performed tremendous. I'm looking through here, trimming names now. When I look at allocating, I'm looking at what sector is going to perform the most. And I think, the financials and industrials, we've been all over the past quarter and a half. I'm looking at who's going to be the next leader here. And I think that's because we've already rallied so much. I want to trim some back. And then now we're really trying to figure out where we want to be next. Where do we want to get overweight next? And I'm not sure. But I think it's a time to trim a little bit rather than being aggressive at these levels.
Hey, Bill, when you're trying to figure out where exactly you're going to put your money at next, what are you looking for? What are some of the key metrics that you're using right now?
Well, I'm looking at commodities broadly, and I mean, crude oil, copper, platinum, all three of them have just roared higher here. And I think so. Materials, real hard assets, energy is a great place. I just would like to see a lot of things at better levels. What worries me, though, and that's sort of playing devil's advocate with this path of least resistance higher, is, I mean, energy, it's recovered. It's been a big leader here recently, but we're getting right back to the damage that started last February. So technically speaking, we could see a little exhaustion, a little fallback there. The financials, I think, can continue to lead a bit if the rate story stays higher, which I do think that there could be a little bit of a pain move in the 10-year Treasury. If it gets above 1.25%, it could quickly go to 1.5%. And the banks would be about one of the only sectors that really, really like it. So I think here right now, again, it's sort of where just trimming back a little bit and looking at the broader macro backdrop. And, things haven't changed. Fed Chair Powell today, the unemployment's still below the curve. Above the curve, they're at 10%. More monetary stimulus is needed or fiscal stimulus needed. I mean, it's pretty dovish overall. So that's why we saw the market middle part of the day or towards the end of the day come back a bit from the lows. I don't like forcing things at these levels, but there's definitely good individual names throughout there that should continue to perform.
There are also some different ways to protect your assets. A lot of people look at gold, and I'm curious what you think about what's going on with gold, silver, and platinum. But with the dollar weakening, I overheard a discussion where people were talking about the way to protect your wealth, or I don't know if you have 45 grand to buy a Bitcoin, but you can buy the fractions of it. What do you think of the people who are doing that as opposed to the traditional stores of value like gold?
Well, I think it's a great way to diversify. And when you look at a portfolio, you have the traditional moderate benchmark of a 60-40, and you're long 60% equities and 40% in bonds. And that's a traditional backdrop, but I mean, there's not a whole lot of interest rates. Not a whole lot of yield in those bonds right now. So you can look at some short-term duration corporate bonds, get somewhere between 2% and 3%. But you got to couple that with maybe emerging market bonds, and then you get some good yields in midstream energy, real assets, and looking at gold and having miners in case the inflation does really pick up. And Bitcoin would fit within there and sort of the hard asset outside the traditional equity box. And it makes sense to put anywhere between 2% and 5% in there, just depending on when you may need your money. If you're closer to retirement, if you're talking about it from a portfolio basis, if you're closer to retirement, then you're not. You want to be more safe with your investments. And you lean on 2% or maybe a little less on Bitcoin. But I think there's a lot of ways that if inflation is playing out to look at things, and the hard assets, like I mentioned, platinum, copper, and crude oil, and things tied to the energy space, I think are going to perform through this year and into next year. I honestly think crude oil, we could see $100 in the cards for crude oil. And I mean, It's been years since this market crude oil has actually weighed on the stock market because of price levels. So that could be something we see the turn of next year if it breaks out this big downtrend.
All right, Bill, stand by. We want to get to some breaking news. Uber is out with its earnings report. Emily McCormick has those details for us. Emily?
Shauna, we are taking a look here at Uber's results coming in better than expected on the bottom line, at least. We saw that adjusted EBITDA loss total $454 million. It's better than the $509.9 million loss that had been expected. And Uber also saying that it remains well on track to achieve its 2021 profit goals. And remember that Uber has previously said that it expects to turn a quarterly profit on an adjusted EBITDA basis by the fourth quarter of 2021. So similar from what we've heard from peer ride-hailing giant Lyft earlier this week. Now, taking a look here on the revenue side, we did see that top line missing expectations, that coming in at $3.17 billion and a bit light compared to the $3.22 billion that had been expected. And those gross bookings also a bit light at $17.15 billion versus the $17.36 billion that had been anticipated. Now, I do want to call attention to delivery gross bookings because those were up 130% in the fourth quarter. This is the third consecutive quarter that we've seen Uber's gross bookings more than double on a year-over-year basis. So that really is continuing to be the growth driver here for this company, as it is still seeing pressure on the mobility side here. Taking a look at the stock action, we are seeing shares of Uber under a bit of pressure. Again, a miss on the top line, and those shares are down by about 2.5% in late trading. Shauna and Adam.
Emily, thank you. Bill, I don't want to put you on the spot, and I'm not sure if you can talk about a specific stock, but if you can, what do you think of what's going on with Uber? And what caught my eye, and they made it their headline, is that quarter over quarter growth grew 13%, but year over year, the pandemic obviously down 16%. But it seems like they I don't want to say right the ship, but on the right course.
I agree that they sound to be on the right course. The stock has performed pretty well here of late. I mean, what stock hasn't performed pretty well of late too. So that's also the question. That's really why I started the conversation with saying I was trimming names yesterday and sort of playing devil's advocate to the fact that this has been a tremendous 6-7 day bounce back. But the path of least resistance broadly remains higher. Uber. I like the stock longer term. I mean, but I do think at these levels it's getting a little overdone. Again, there's like little questions about you mentioned the year-over-year growth and where we're going to be in the pandemic. So that does overshadow some of the good performance that we've had here recently in the stock.
All right, Bill, we've got some more breaking news. We need to get to Jared Blickery, who has Zillow earnings for us. Jared.
That's right. And we're seeing the stock pop about 2% in after-hours trading. And that comes after it made a beat on adjusted earnings before interest, tax, depreciation, and amortization, also known as EBITDA. That came in at $170 million, beating expectations of $125 million. And adjusted EBITDA increased from $3.2 million loss a year earlier. Also announcing, and I think this is pretty key to the pop here we're getting in the stock, is that they've agreed to pay $500 million to acquire showingtime.com. And this is a company that makes tools for house hunters to arrange home tours with agents. And just a quote here from the CEO, Rich Barton, from the earnings announcement: Zillow's strong results reflect exemplary execution and continued growth during the scary roller coaster ride that was 2020. And let's just take a look at the charts here, because the stock is now up almost 4%. And over the last year, this has been a stock that has been on fire. Here's year to date. So this is up 26%. And over the last year, you can see up 240%. A lot of these stocks, including Zillow Group, at record highs, as we have a situation with huge demand for housing and historically low mortgage rates, guys.
Thanks, Jared. Bill, just to get take a step back and take a look at earnings and what we've seen come out over the last couple of weeks, the stock reaction specifically to names that just meet expectations. In some cases, they'll beat them by a small margin, yet stocks selling off. We talked about that with Akamai's CEO earlier today. What are your thoughts on that? And I guess, what's your view just in terms of the numbers that we've gotten out from companies so far over the last couple of weeks?
I mean, the reports have overall been good, and the market has performed higher. I mean, that's really what we've seen. But it's I think the expectations have been overall low, and what this could cause is some higher expectations as we move through the pandemic. Vaccine rollout continues to support a more optimistic narrative 6 months, 12 months out, and the Fed still remains accommodative. So I mean, the real question for me in looking back at yesterday was in starting to trim names that have just really outperformed overall, even outperformed a great market, is in ahead of Fed Chair Powell today, and ahead of or after a 6-7 day rally is looking ahead and saying what is going to slow this market down. And the CPI data today was something that potentially could have been a hurdle, but in hindsight, maybe it is a little bit of a tailwind, and coupled with Fed Chair Powell's accommodative narrative. So, I think the earnings have overall been good, but from beating a low bar, and that just makes you wonder: are that bar going to be raised down the road?
All right. Bill Baruch is Blue Line Futures president. We appreciate you joining us here on Yahoo Finance Live for the closing bell.